So we got some major moves last week in the 10-year bond yield and as a result in interest rates as well. Let's talk about what happened and what we can expect for this week. Last week, the big news were the CPI numbers, so the Consumer Price Index. Bond yields started to rise on Tuesday in anticipation of higher than expected inflation for January, and the numbers didn't disappoint. The initial expectation was for inflation to increase by 0.3% month over month or 2.8% year over year. However, when the numbers were actually released, they went up by 0.5% month over month. And that brings us to 3% year over year, which is moving us away from the Fed's target of 2% inflation. And as a result, we see the spike in the bond market. Now, yields did come down by the end of the day as investors started to process the data and realized that it wasn't as far out of alignment as we had feared it might be as they were coming into the day. By the end of the week, though, the retail sales numbers helped bring bond yields back down by coming in significantly lower than projected. So we anticipated a negative 2%, but we actually got a negative 9%, which is significantly lower than last month's 0.7% increase. So all in all, bond yields came down just a titch by the end of the week from where they started, keeping interest rates on their trajectory of moving lower. Moving into this week, our big news will be around the real estate market with home builder confidence coming in tomorrow, housing starts and building permits on Wednesday, and existing home sales on Friday, all of which are expected to come in lower than prior month numbers. And if that holds true, that will keep interest rates on a downward trajectory. Now, we may also see some volatility around the end of the week based on the initial jobless claims and on Thursday and consumer sentiment on Friday if those numbers come in significantly different than what's projected. And then watch for next week's video where we're going to talk about the upcoming PCE numbers and how those might affect the March meeting for the Fed. So let me know what your predictions are in the comments, and otherwise please like and subscribe if you find this information helpful, and have a wonderful day.